Want to start investing for your future and doesn't know how? Guess what? You watch this video and I'll give some tips, quick tips in how I would start investing in 2022. Hey there, this is Hugo. Welcome back to Crypto and Stock with Hugo. It's a pleasure to have you guys here. If it's your first time in this channel, please go ahead, subscribe. Guess what? It is free and help a friend out. And if you like the value of this video, go ahead, press the thumbs up. If you want to press the thumbs up right now, I'll take that. So you're new to the market. Maybe you're young, maybe you're old like me, but you have never invested and you want to start investing right now. What would you do? Whew. Guess what? The best time to invest is right now. Start today. Put the first dollar there. And remember, consistency is the key. Okay, we are in 2022 and the year started with a lot of volatility. But to me, it's like back in March of 2020 when all the stocks due to the pandemic crashed down. And now the stocks are cheap. So if you look for a long-term gain, man, you can bank in the future. All these stocks are pretty good price, in my opinion. Again, just a disclaimer, I'm not a financial advisor, so before you invest, don't do it just because I'm telling you. Invest because you understand the business or you follow up a financial advisor, okay? So despite the Fed's increased rates or Supreme Court Judge Breyer being retired, and even the crisis between Russia and Ukraine, you still here and you still want to invest, right? That's great. So let's go how I would start investing in 2022. Rule number one, if you have a credit card balance,
pay that off.
That's the most important. Before you save any money, before you do anything, credit cards can go like anywhere between like 16% to 20 or 30% a year. Pay those off. Those will eat your money. If you have $100 balance on the credit card and don't pay that, you pay late fee, you pay 18%. That's mean $18 a year. So it's a snowball that will never stop. So pay those off as fast as you can. I don't care if you need to get a DoorDash or Uber, any second job, work in the restaurant, pay those off ASAP. Rule number two, if you work and your job match your 401k, match it. Go ahead, do that money. Put that money down. Because, for example, if they match 3%, put 3%. If they match 5%, put 5%. And then you ask me like, hey, should I put 10%? They match 3%? Like, no. If they match 3%, put 3% down of your check. It goes before tax and you got their free money. Why I don't put more money in 401k? Because 401k is controlled by the companies and is not controlled by you. And I might be a little control freak, but I like to manage my own investments. I don't want someone decide what stocks I should buy. Rule number three, for retirement especially, you want to start, if your company, you match the 3% that your company is paying on the 401k, okay? Forget about that, that money is out. Now you're going to start a Roth or a traditional IRA. Those are retirement account, and you can choose between the Roth and the traditional, depending how much you make. Like, for example, the Roth IRA has limits of 129,000 if you're single and 204,000 if you're married. So if you make more than that, you need to go on the traditional. If you make less than that, you go on the Roth. That's the best, especially for young people that doesn't make that much money. Most of the young people, I know some young people make a lot of money, but if you make less than 129,000 a year, you put that money down, and whenever you collect that money back after you're 59 and a half, you don't pay a dime anymore. All that money, all the money you put in plus the gain, tax free. So if you're younger than 18 and you ask me like, Hugo, how do I do? How can I get a Roth IRA? My daughter started her Roth when she was 15. She started work at 15. Just remember, for the Roth IRA or any IRA, you can only deposit up to $6,000 a year if you're younger than 50 years old. And if you're older than 50 years old, you can put $7,000 a year. That's the max. And as well, you cannot deposit more than what you make. So if you're 15 years old and only make $4,000 a year, you can only contribute $4,000. You cannot put more money, you cannot contribute more to the investment more than what you make. But if you make $10,000 a year, you can put up to $6,000. You ask me, where can I start investing if I'm under 18 years old? And I'll say, my daughter start on the Fidelity. She has a Roth, like now she's 18, but she had a minor Roth IRA with Fidel Investment. And the good thing is you can even buy partial shares. The only problem with the Fidel Investment, you need to buy their ETF. If you're buying their ETF, you can buy partial shares. So you just put like $20 a week or $30 a week, and that money will grow. And come on, if you start investing when you're 18, right? Like 15, and you let that money grow and you invest every week, $20. Let's put $20 every week. You know, instead of going to Starbucks twice a week, you invest that money. That money will grow. By the time you're 60 years old or 62, you retire as a millionaire. You're gonna have more than $1 million just putting like $20 a week. Yeah, I have another video that I put the math on that, but you become a millionaire. So why not? My two favorite platforms to invest for like RAs or Roth or traditional is the number one for me is M1 Finance. I love them. They are pretty good. They do not have custodial one. So if you like younger than 18, you cannot go that. Then I'll go to Fidelity. And the second one's Fidelity. Those are my two goals for retirement accounts. My fourth tip in how to invest for your future is open a trade-free account.
Why a trade free? Free? Because you don't pay any fees.
And you know, the fees can eat your money, especially if you just invest a little bit. I remember back when I was younger, I want to invest some in Facebook when the IPO came out, and my trader was saying that and I want to put $50, and he like, hey, it will cost you $5 per transaction. I'm like, wow, like 10% of what I'm trying to invest, especially in the young age. Why am I gonna pay 10% and lose 10%, right? It makes no sense. Although if I had bought Facebook at that time, I would gain a lot more than 10%. But let's go back to the free trade apps that I like, or the platforms that I like. M1 Finance is my number one, no question. You can buy every day. You put in money. The only thing they trade once a day, and usually it's around 7:30 in the morning. The second one is Robinhood. Robinhood, you can buy partial shares as well. I like because there's a little bit crypto there that you can buy, some Ethereum, some Bitcoins. The third one is Fidel Investment. I do like Fidel Investment. I think the platform there is great, has a lot of teaching, and you can call them and ask some questions. They will help out. I've done that several times. Public is a good one. I do not invest with Public. I do not have that app or that platform, whatever you want to call. But it is a good platform to invest as well as a trade fee. Plus, there's a tons more. You know, if you Google, there's a tons more. I would stick with between M1 Finance and Robinhood as a start, and you can do right on your phone. Although, I guess any platform you can go on your phone now. Whenever you start investing, the most important rule is consistency. If you're gonna put $10 a week, put a freaking $10 a week. If you're gonna put $20 a week, put $20 a week. If you're gonna put $50, put a freaking $50. And if 1 week you don't have enough money, you know, you only have $20 and you've been putting $50, go ahead, put a $20. Any add-on to your investment, 30, 40 years down the road, you're gonna have so much more money, because it's like that. You have your money here, it grows. Then this, you add a little bit more, and all this is gonna grow even more. And let me show an example. So let me show this example. If you have $1 and you invest and you double your money, now you have $2. But you decide to take one back and invest this next month, or whatever investment term it is. Next month you're gonna have $2. But if you go invest $1, and then next month you have $2, and you invest the whole $2, and they get the same gains, that 100% gain, awesome gains. You have $4, and then you invest the whole thing, and then you have $8. And whenever you see, you have a lot of dollars. That's how it works. You know, you keep investing and just let that grow, especially if retirement investment account. If you invest, your money start making money, not just from the $1 initial, no. Your money, as soon as you have two, you're gonna make money off the initial $1 and the gains $1. So $2 are gonna become 4, not gonna become 3, and so on and on and on. Time is the best friend of the market. So if you have years to let your money grow, and the gains of your money growing will have more grow, you just make that snowball that start like little like this. You're 30 years old, you only have like a ball like this, but then start rolling, rolling, rolling. And by the time you're 60, man, you have an avalanche. So invest consistently and keep letting your money grow. This is a quick video. I hope you enjoy. I hope I try to make it a little bit more fun. And if it's your first time again, subscribe. If you like the video, smash the like button. If you put a comment, put a comment. And one day, let's make a lot of money, right? Okay, have a good day. Bye.